Good evening, I'm Amaya and welcome to the show which traces the journey that a private company takes in transforming itself into a publicly listed company on the Colombo Stock Exchange. On that note, welcome to Going Public, a groundbreaking new TV series which is a joint initiative of the Securities and Exchange Commission of Sri Lanka, the Colombo Stock Exchange, as well as NTV Sports. Now, on that note, I'm going to hand you over to our very capable host this evening. He is the former director of the Securities and Exchange Commission, as well as a capital market expert in his own right, Mr. Vasula Premawardana. Vasula, over to you.
Thank you, Amaya. Welcome to Going Public. As you know, this series explores the transition of a private company into the public arena as a publicly listed company. Today we are featuring a very exciting panel from the Securities Exchange Commission, and on my left is Chris Gunathilaka, Consultant Specialist Special Projects, SEC, and Ayanthi Abevikrama, Director Legal and Enforcement, and Mr. Harshana Piris Surya Peruma, Director Corporate Affairs. Welcome to Going Public. Maybe Harshana, you can start off with this exciting new project listing that the Securities Exchange has started.
Just to give a brief introduction why SEC is taking this initiative is to create awareness among these prospective listing entities that there is another window of opportunity for them to raise alternative sources of financing, and in a simplified mode also to replace the myths out there in the market with the real facts about listing, and also give an opportunity to the prospective listing entities to meet the regulator face to face. At the end of the day, how we reach out to the prospective entities, Vasula, is we conduct one-on-one discussions with entities. We have collective forums for entities where multiple participants come and raise their questions, get their concerns addressed, and also we reach out to public through public media of this nature. For many business people, for business community, the concept of financing through alternative modes is a common thing. For example, business community is quite conversant of getting finance from financial institutions such as banking. It is of a similar concept, but in the case of raising finance through the capital market, where instead of giving collateral to get their financing, there is a share of ownership that they share with the general public, with the investors.
Right.
So depending on the entity's degree of maturity, for many business enterprises that we have spoken to, it is the climax of their entrepreneurial journey to get their entity listed in the Colombo Stock Exchange.
Right.
And it will expose these entities to multiple facets of opportunities that wasn't available earlier, which they are well aware of. And at the same time, since the entity is not providing any collateral in the case of equity, the investors in return will have some expectations as well.
Right.
And that is where the governance structure of the organization has to be in place. The disclosure requirements has to be met, which is put in place by the regulator, for example. So likewise, but this process is going to take a little while, and that is where we have a dedicated team within SEC, which we are doing together with the Colombo Stock Exchange, where if there's a concern, they can reach out to the consultants that we have, the team of consultants that we have organized. And through the discussions, one-on-one discussions and various forums, we have built up a healthy pipeline of entities who have expressed their serious concern and willingness to get themselves listed within the next 3 years.
Yes, right. Chris, how about, I think he touched upon something about the companies that benefits, for example. From your point of view, what are the benefits that a company may get from getting listed?
Absolutely. See, being listed on the Colombo Stock Exchange itself, and I think Harshan also alluded to the fact that there is alternate sources that they can use the listing as securing alternate source of funding for whatever progressive development plans that a company may have for the future. But most times when a company has come to the point of getting listed, they are looking at long-term financing, which may not be in line with normal corporate lending, which is out there available from the financial institutions.
Right.
So raising funds through an IPO, for example, or through listing, gives you access to long-term financing, which will the payback period of those projects that the company may be taking on board it's better suited. So you're actually optimizing your capital cost.
Right.
By going in for
because I think obviously from the beginning of this program, every company and every panelist that we had, we raised this question, because I think you touched upon something when you were talking before the program. The bottom line is first, what's the benefit?
Absolutely.
I mean, if the company owners haven't realized that there is a benefit in going public, they are not going to take the steps.
Absolutely. So
I think the first thing what you said was planting the seed, where you understand why do you actually not
that's right
requirement literally, because at a certain stage a company must expand to its next level.
That's
and that happens more or less from being listed in the public arena. And you touched upon some good points. I'll get back to Harshana. So what does this project listing does? Can somebody call the Securities Exchange Commission and say, okay, what happens? How do they tap you guys?
Right. Vasula, if an entity is having any concerns or clarifications that they'll be needing, that is where this project that we have initiated will come handy for them, which is a joint role by the regulator as well as the Colombo Stock Exchange.
So Stock Exchange also is involved in this panel, is it?
Very much involved.
Right.
They play an equal role in the process because they have the capability and expertise, as well as we have brought additional resources to facilitate the process.
Right.
The entity can reach out to us, and we will take the entity through the process. It is not the professional advice per se as to what needs to be done.
It's more of a guidance.
Exactly. We will keep them enlightened on the process that need to follow.
Right.
And obviously by doing that they can reduce the time that they might take otherwise to come to the market, and what are the entities that they need to consult during the process, what are the regulations that they need to be aware of. For example, if there are specific SEC Act requirements that has to be met prior to the application, those are the areas where the team of consultants and the project team can come together and guide the entity.
Right. So how about internationally and locally? Is there a divide here? Do you all see interest from companies that may want to come here, or what exactly is that bit? How does the SEC play a role?
Referring to the entities or the type of promotions that we are?
Promotions, and yes, where do you start going through? Yes, please. Yes.
See, we are actually we conduct international investor forums, and we've had one just recently in January in Singapore, which was one of the most successful international forums we've conducted, with over 200 participants representing different fund management companies.
Right.
See, another one of the benefits that I should mention for a listing is getting strategic investors into your business. Any business should look at shareholders who are interested in your long-term benefit. So they want the interest of the company to exceed just a small spike in the market where they quickly exit to just gain a small profit. The long-term investors are those high-quality investors, and some of these are represented by fund managers overseas who are looking at investing into countries of our nature where there is huge potential.
Right. So when you talk about the international promotions, you are talking about actually the investors, and as a Colombo Stock Exchange or the capital market as a whole, you all want to more or less go and promote.
That's right.
So that brings in perhaps the institutional buyers or retail buyers from abroad into local companies.
Correct.
But obviously at that time the company needs to be listed.
It has to be listed to be able to be exposed to that.
Right. So this is not about pre-IPO promotions.
No,
this is post-IPO.
Right. So that is one of the benefits of being listed.
Right. Anything you want to add, Harshana?
Yes.
Yes.
The capital market, if you take Vasula, why it is important for us to promote it, because it plays a major role in terms of a national significance as well. There are few items we tend to compare against the GDP of a country, and the capital market of a country is one of them. And even among the items that we compare against the GDP, the percentage the capital market plays in relation to GDP is substantial. Within the region, we have a lot of scope and potential to grow ourselves to the next level. So SEC has recognized the requirement that there is a role to play to take the capital market itself to the next level. So that is where the capital market is getting involved to promote and this concept of reaching out to for finance through capital market. And also elaborating on what Chris mentioned a little while ago, apart from promoting the concept through international arenas, we are doing a lot of local activities which are emanating from our objectives of this particular project to promote this concept and take the ideas, create more awareness among the investors, among the entities who are willing to come into the capital market.
Right. Thank you, Harshan. We'll take a short break and we'll be back on Going Public soon after. Welcome back to Going Public. We have a very interesting panel from the Securities Exchange Commission who is with us today. Harshana, you are going on about the project listing in the SEC.
Exactly. To elaborate further on the type of initiatives that we conducted, similar to what is happening at the international front, we put quite a bit of effort locally as well to take the message out to the prospective the entities who are willing to come and get themselves listed. For example, we have within the last 5 months there are about 5 different forums that we conducted, starting from the main issuers forum with the attendance of more than 150 prospective participants. And then we conducted to the northern province the investing community and targeting the business community through the Yalpanam Chamber of Commerce, an initiative. And then we reach out to the young entrepreneurs from the IT industry together with the SLASCOM. Then again another initiative as the regulatory symposium. And again another initiative to reach out to the business community in the central province and in Wayamba province through the Kandy listing forum. So there are a number of initiatives that is in place where entities can come and participate, get their concerns addressed and receive clarifications for the issues that they might have. I got some slides to highlight the response that we received during those events that we conducted. Where a lot of participants asking questions in the areas that they really matters for them. For example, how to convert their private company to a public company. Say for example, a company who has already obtained the status of public company, how to move into the listed entity status. So these are areas where they can get clarifications.
So in these awareness campaigns basically,
yes,
in the forum, you have covered these topics to an audience of invited people, or how does that work out?
Generally to an invited group of people,
right,
but we carry out media publications, various form of communication. So if the entities out there to whom we have not reached out personally, right, they could always contact us, either SEC or CSC, because as I said, this is a joint initiative, and we are more than happy to arrange a opportunity for them to take part in the event.
Right. So in one sense, this joint initiative is taking the word out to the public or particularly interested or possible parties, and on one side, once you take the word out, you will also do a bit of hand holding, or taking them on board and then taking them through the process. Is that a good analysis of that?
That's a very good description of what actually happens,
right,
because most times until a company has made that decision that they need to list,
right,
they may not know what are the next steps that are involved, because there are several stakeholders that will get involved in an IPO. For example, if they are choosing to list through that process,
right,
there are several stakeholders that have to come into the party. Investment bankers, for example, auditors, your accountants, lawyers, the company secretary, and most times there is a time lag that may occur from the point that a company submits the application for listing to the CSC listing team actually vetting those documents and approving it.
Right.
And most of the delays happen because the documentation is not right, the T's are not crossed, the I's are not dotted.
Right.
So we have actually on several occasions in the recent past where we've had a few listings, we have facilitated a meeting and we take the CSC listing team with us to sit down with all those stakeholders that are responsible for making sure that an IPO is a success for that particular company,
right,
and they discuss what any areas that need to be clarified or any gray areas to be, totally
So
sorted
fantastic,
out.
because I think one of the key things I have taken from this project initiative is that you basically will hold the hand of any company that is interested, who may not be aware of the first of all the benefits.
Absolutely.
Secondly, once they are aware of the benefits,
Absolutely.
what to do next.
Absolutely.
Because what to do next is the
Key
biggest key question, because once you are on board with the investment bankers perhaps, then they can guide you. But some people may not be aware of
Absolutely.
the need for an investment banker in the first
Absolutely.
place. So you guys will first basically take that first initial steps
Correct.
to ensure that the company that is going to go public
Correct.
has the proper guidance.
Correct.
Again, what are the common questions that you may have heard from at these forums, or the people who come to SCC?
Are you referring to concerns that people
Yes,
have?
yeah.
Well, with regards to, there's a lot of myth about listing that people are kind of, struggling with. One of the biggest myths, I think, is with regards to the control of the organization. As you can imagine, most private companies, there's a lot of, blood, sweat and toil put into those by those individual proprietors. And, they have this fear that they will lose control, or the management control of that company, and somebody else is going to come and run it. But the market as a whole, right, as an intelligent organism, really recognizes the fact that this entity has now reached a point where it is going to be listed due to the managerial efforts of the stakeholders that have made that decision. So it is in very rare circumstances that they will not want that management to be part of this company going forward. Does it make sense?
Certainly.
So that is really a myth that is out there, and I'm sure Ayanti is probably more experienced in telling you about the takeovers
Right.
that people fear as well, because that is another major issue that people have with regards to the number of shares that are out there in the public, which may trigger a takeover or even a hostile takeover down the track, and them losing their business entirely.
Right.
But I will leave that for Ayanti.
So one of the things that you touched upon is that some of the questions that I got from the other corporate owners is, of course, the takeover side, and you brought a new aspect of the management.
Correct.
But generally, of course, when a company goes to an IPO stage, the management is generally also shareholders, stakeholders of the company, of the entity itself.
Correct.
Only at a certain more mature stage, perhaps you have the shareholders and the stakeholders perhaps separated from the management. So that's a concern I think you can address very easily.
Absolutely.
Of course, when it comes to the takeovers and mergers, that may be a concern, but I think Ayanti, you can elaborate on that because Chris brought it up.
Yes, Vasudha. Like one of the biggest fears that most of the prospective issuers will have is about the fear of takeover. So one of the questions they asked us is, by maintaining the minimum public float requirement, whether they would face a possibility of a takeover. My answer to that is a categorical no. By merely maintaining the public float, you will not face it, because actually it's only 20% for, say, if you are a public listed main board company. But having said that, the takeovers are always a possibility when it comes to a listing. So if someone has a total fear of a takeover, maybe you can list debt instead of equity.
Right.
That's on the one side. But if you do list equity, yes, there can be a takeover, but it is usually it occurs with one of the non-public shareholders selling a significant stake.
Precisely. So part of this takeover fear actually is a more internal fear, as opposed to what is going to come from the publicly listed shareholding that is out there.
Absolutely.
Of course, that also means that somebody within the initial entity of owners may want to divest.
That can happen, yes.
Yes, so basically it's, as opposed to takeover fear, is actually, I would say, is an opportunity.
Yes.
That didn't exist before going public, because
That's right.
perhaps an older shareholder, person with a larger share, may want to be able to now give a certain percentage out and benefit from this being listed.
That's right.
So has that happened in historically that
Yes,
hostile
actually,
takeovers?
yes, hostile takeovers have taken place,
Right.
as you know, in the history, but it comes with the attractiveness of the company itself. So as the company grows, as it becomes more professional, and as it makes more profits, naturally it would be attractive to a corporate raider out there. But having said that, I mean, you know, if you want to draw an analogy with cricket, I mean, you can't bat whilst covering the wicket. In the same way, I mean, coming for a public listing, there is a possibility of a takeover. I mean, I won't say no, that possibility is totally out. But the chances are, like, I mean, the more attractive the company becomes, even if there is a takeover, the new person who takes over might want the existing management to continue. Because it is that management that made the company attractive, even for a takeover.
One thing I guess from the experience in capital markets that I have also, at the end of the day, the takeover is still beneficial, because a takeover doesn't happen at a price that is not fair by the current shareholders. Nobody is going to sell out if it is not beneficial for them. So they may not have ownership, but they are going to have been paid for what they have built.
And also very often takeovers have occurred due to a non-public shareholder selling a significant
one of the
stake.
initial partners divesting his or her shares.
Can I just
Yes,
please. And that really brings another benefit to the forefront, being it actually creates an objective value for your company.
Precisely.
See, if a company is not listed, right, what happens is your value is always discounted, because, you know, the operation of the company is kind of shrouded in mystery, like nobody knows what your, you know, accounting systems are, what really happens within it. When it is brought out into the public domain, that shroud is virtually lifted off. Right? So transparency is created, and we have requirements with corporate governance and all those measures in place, creates a point where it actually attracts an objective value of what you can get. So any investors looking to divest, the company being listed is obviously more beneficial.
Yes.
I'll add on to what
I think it's time for another break. We will be back on Going Public. Welcome back to Going Public. Here we have a very exciting panel of directors from the Securities Exchange Commission. Harshana, you were talking about the process of going public through the new initiative. Can you enlarge on that?
Sure. If you look at the process, if the entity is meeting the basic requirements for the entity to get listed, then the matter could be directly handled and dealt with by the CSC. For example, if it is a main board company who are meeting the minimum capital requirement, the number of shareholder requirement, likewise, they can approach directly CSC to get the listing. However, if the entity requires the discretion of the regulator, that is where the regulator chip into the picture. For example, the Section 28A approvals, if the entity requires, if the locking to be lifted for the entity to meet the number of shareholder requirements, then obviously they can reach out to the regulator. But entities, however, need to be mindful of there are requirements at the time of getting listed and as continuous listing requirements. So in either cases, Sri Lankan capital market has evolved through a disclosure related framework. So there are, for the entity to bring out disclosures on an accurate and a timely manner, then there should be an internal process within the organization. And to get that internal process operated in an efficient manner, that's where the corporate governance will come into the picture. So this process might take little time for enterprises, for young entrepreneurs whose operations are not brought up because things were held close to themselves. Information that might be trade secret if you share with outsiders. So this does not, our disclosure requirements, not only in our terms, in anywhere else, it is not sharing your trade secrets that will take out your competitiveness away from your operation. Management is at the discretion to make a decision as to what are the type of information that need to be shared, when need to be shared. But however, certain price sensitive informations, regulator will also monitor. The Colombo Stock Exchange will also monitor. Even certain rumors that need to be clarified, the management can come forward and do that one. Otherwise, the regulator will request the entity to get those informations or the rumors clarified, for example. So likewise, the existing framework is developed based on providing sufficient disclosures on a timely manner with accurate information.
Right. So obviously what you are saying, I think we have answered this question several times in this program also, is that you are not giving your formulas away, you are not giving your patented secrets out, but the basic disclosure is the financial disclosures, which gives the price sensitive information so that people can make a valued judgment as to the valuation of your company, which actually benefits the company because it reflects in the share price. So at what cost does this disclosure process and the benefits, how does it weigh out? I mean, some people may think, it's such a, too much work to be done to get listed. Is that a correct analysis of that?
I would approach it from a long-term perspective, Asula. Over the longer-term period, entities, by the example, we could see entities are benefiting by getting themselves listed because they are exposing themselves to amount of and types of opportunities which they didn't have otherwise. For example, for an entity who did not borrow without in the absence of collateral, this is an ideal opportunity for coming to the market, either to raise capital in the form of equity or to raise finance in the form of debt. That is where the debentures as an instrument will play a handy role. But since in this particular case where there is no collateral, as I mentioned earlier as well, there is a degree of responsibility from the entity as well to make sure investors are compensated accordingly, because when investors invest their hard-earned money in these instruments, they will have an expectation to get a return as well.
Okay, so we're talking about the disclosures, continuing disclosures. So what are the duties of the directors, Anthi?
Yes, actually, Vasula, to add to what Harshana said, one of the basic duties a director has is a fiduciary duty a director has towards the shareholders and the investing public who will become the potential shareholders. So one basic duty the directors have is to comply with the listing requirements of the Colombo Stock Exchange, and as Harshana said, the bulk of which really are the corporate disclosures as a continuing listing requirement, because that is number one priority. One of the major duties the directors have towards the shareholders is to disclose to the public any information which can influence their decision-making power of the investors as to whether to sell a share or to buy a share.
Right.
Having said that, whilst the information is only amongst the board of directors and the insiders, they should not trade in the securities of that company. That's another very important duty.
This is why you come into the insider trading.
Insider
and so
trading
on and so forth.
yes.
Right. But of course, the directors of the board are aware of many such information that is not in the public arena yet.
Yes.
And they have to keep it as such. And during the period that it is not common knowledge, they themselves also cannot benefit or their relatives and so on and so forth. Which seems to be a very fair thing that they need to comply with.
That's
and abuse obviously would be if they are not complying with that and trying to make a personal profit of information that another person cannot.
Absolutely.
Yes. So other than that, the disclosures are quite of, it's technical, it's financial, and it's getting...
It's not necessarily financial too. It can be something totally non-financial, but which can have a long-term impact on the company.
Right.
So that information can very well be price sensitive.
That's what I'm saying. So one side is the price sensitive information that is streaming in dynamically to the company.
That's right.
And one set of disclosure is a automatic set of disclosures that the company needs to file with the SEC or the stock exchange, like your quarterlies, your
financials and the audited
yes. So those are a steady setup. Now, talking about that, now, is that a cumbersome process?
I would say no. When they do disclose, they must ensure that the information is true, accurate, and is free of misleading disclosures. That is something that they'll have to make a call on, because the information they put out to the market should be adequate, so that any omissions done in respect of any particular information should not make the information that is out there on the public domain to be misleading.
Right. Okay.
So that is one essential fundamental duty the management has.
Anything you all want to add, Harshana, Chris?
Just in closing point with the disclosures, I think what we need to remember is in the whole world, if you look at it, I mean, some of the most secretive companies are listed companies.
Right.
I
That's
mean,
right.
I'm not sure whether I can even say the names out loud, but they deal in high-level secrets.
That's right.
Their
They are
formulas,
public. I mean,
Apple,
from
Coca-Cola.
Sony, Apple, Samsung,
Exactly.
any one of these guys,
Listed
they
companies.
have very
And some of the
competitive
most
products.
highly
and
priced, most
precisely.
valuable companies in the world are listed companies, and they probably go through the same, if not more stringent, regulatory frameworks.
That's right.
And
Yeah, even like
success is-
pharmaceutical like Pfizer, I mean,
Of
they are
course.
like spending billions of
Absolutely.
dollars on research.
Absolutely.
And they keep it a secret.
Yeah, so that really
and-
busts that myth that
That's right.
your trade secrets are going to be out there in public
Right.
domain, which is not the case, and yes, so clearly
But of course, whilst they
articulated.
keep their secret, they should not trade in those securities.
Of course.
That's right, of course. I'm coming from the director of legal. Yes.
Came into the discussion, I would like
Yes.
to add something to that one as well. If an enterprise, if an entity currently believes the products, the types of products that we have might not suitable to their requirements, they can make a fair request to us to create specific products. But provided if it is not a one-off scenario, then we would like to consider, we are very receptive to new idea. We would like to hear from the entrepreneurs to cater to their requirements. A classic example is the amount of work that we have put together with BUI and CSE together to create a suitable trading platform for BUI companies to
Right.
cater to their specific requirements. So similarly, we are now working with the SLASCOM team to create a suitable product if it is appealing to the young and bubbling entrepreneurs from the IT segment of the country. So likewise, and we do have the capacity to coordinate with the other jurisdictions because we are a member of ISCO. So instead of reinventing the wheel, we can share their experience, what they went through, and we can build up on that knowledge and try and see whether we can create new products that will be receptive to these new types of entrepreneurs and enterprises
Right.
that are coming
Yes.
up.
One good thing is that, of course, we don't need to reinvent the wheel, like what you said, because if it is out there somewhere, I mean, most other developed countries may have gone through various types of instruments that can be brought to market or that can help the company come to market. But you brought up a very interesting topic, which is the BOI companies, which are basically for young entrepreneurs, to the IT people, because most of these companies are expecting to be first financed by some private placement or internally from the shareholders and stakeholders. Now a BOI company or IT company, it's a startup probably, some guys from say Moroto University with no money but with an idea and a technology available. How can they, let's say they have a strategic partner, an international partner who's willing, can they fund their whole project from day one through this BOI listing?
I would, at this stage, Vasul, I will frame it. BOI currently, the negotiations and the work that we have done, targeting the larger segment of larger type of corporations.
Right.
But having said that, if an entity, we are currently doing some research and groundwork in the arena to see how to meet the specific requirement that we just brought about.
That's right.
Where existing regulations require an entity to be in operation for at least 1 year prior to reaching out to the
Right.
capital market. Not necessarily that they need to make profits, provided they have a positive net asset value, then they can reach out to the capital
We'll
market.
come back to that. We have to take a short break and we will be back. Welcome back to Going Public. Hi Shani, yes, we are talking about the listing process, and you brought about the BOI board that you are in discussions with, and of course I asked this question about the initiatives for companies to come out and list, perhaps immediately get their funding. Is that possible?
Based on the existing framework, Vasula, for an entity who, as I mentioned earlier, who is in operation for 1 year plus, can seek out to capital market for their capital requirements. But as I mentioned earlier, we are doing some groundwork and preliminary research to understand how we could facilitate this type of young entrepreneurs with brilliant ideas to propel their ideas to a business venture level, so they could benefit from the capital market as well.
Right. Now, for the fact, the SEC Act obviously focuses more on investor protection, regulation, market development, so on and so forth. Within the Act, what do you have to protect the interest of perhaps the companies that are listed?
Let me put it this way, Vasula. Instead of protecting, what are the provisions that we have which takes care of the requirements of the issuer? For example, if an entity wants to get the discretion of the commission in an area where they currently do not have compliance, for example, section 28A, which clearly said an entity who has issued shares within the last 12 months cannot be applied for listing. But the entity, however, can request permission, approval from the regulator to grant them the approval to go ahead with listing. So, subject to the criteria within which we are operating, we will evaluate the circumstances and provide the approvals. Similarly, if certain particular segment of shareholders are being locked in due to locking in provisions, the entity could make a request to the regulator to release the locking status for these shareholders to meet the criteria of number of shareholders in the case of listing. So once again, the regulator will consider the circumstances and will make a call based on the guidelines that we'll have. And on top of that one, the continuous evolution of the capital market is being brought in, the flavor of that one is being brought in through various directives to the protection of investors as well as to the entities as well. We work very closely with the international jurisdictions. So the development that will benefit the entities by having products of that nature, the concepts of that nature represented through our framework will also be benefiting. So those will also benefits that entities could look forward to.
Yes. Pant, I think you also answered this question priorly, but I would like to come back to this because this is again one of the pet questions that most people have about overburdening regulatory intrusions, perhaps even if you take their words for it, from the regulator, from the SEC once the company gets listed. What are your thoughts on that?
My thoughts on that is actually there again I would say, Vasula, it's a myth in the sense actually better your compliance, better your corporate governance, better your internal systems, and how, depending on how well you perform, you are gaining in your integrity and goodwill. So the higher you go in the integrity stakes and goodwill, the lesser will be your cost of capital. So I mean, it's a net gain for the company.
Right.
And
so ultimately, the burden of disclosure is not a burden.
Not a burden at all, because I would say that's a very that's the least a company can do, because you are raising your capital requirements from the public, and you owe that fiduciary duty. So all what a company has to do is to give out that information. So there's more information about the company out there in the market, less opportunity for market abuse and less opportunity for insider dealing too.
Certainly, and from that, on the other opposite side would be the more information the company is putting out, the higher and the better the valuation of the companies, and the price discovery process is a much more transparent one.
Just to add on to that one, an entity who has shared more information, who has proved to be a very transparent company, compliance with the requirements, having a very foolproof type of a process internally, in fact they will be able to borrow even at a lower than market prices, because the lenders will be happy and comfortable because the information is out there, they have the trust and confidence on the process and the management. So it will be an added advantage, not losing your competitiveness. Actually you will get a competitive edge over the others.
It will be a net gain basically for the company.
Chris, yes, coming back to the process itself, what are the resources that are available to people who want to go public?
Apart from the dedicated team that is involved in this increasing the number of listed companies in our stock market, we also have the information can be gathered through the websites of both the Colombo Stock Exchange, which is I think csc.lk, and through the Securities and Exchange Commission website, which is sec.gov.lk. And we are more than willing at any point to take these parties through and play that facilitatory role of introducing them to investment bankers. We do not make recommendations, need to make that absolutely clear, but we can give them a list of whoever's out there that they can then contact themselves. And we also have publications, information publications in all 3 languages. The Colombo Stock Exchange has actually printed. This is a very good document which actually goes through most of the stuff that we've covered here today is included in this. So that is another additional resource, and it is available in all 3 languages.
Right.
And as alluded to before by Harshana, the listing forums that we conduct, both here and overseas, and also those visits with the team.
Right. So the bottom line is that the SEC is actually proactively engaging the companies who want to be listed.
I would go so far as to say that we are probably one of the few regulators in the world that have taken such a proactive approach to market development, really going out there and being, because it's 2 functions. You have the regulatory function and the market development function. So we are, with this project and with this objective, what we are focusing on is the market development angle.
Yes, I can certainly see that, and a very excited team here. Yes,
add on to that one, the joint role that we play together with the Colombo Stock Exchange as well. They are equally represented in our initiative. They have a dedicated issuer relations divisions. They are much more thorough, and the expertise is available within their disposal. So at any time they can reach out to CSE, Colombo Stock Exchange as well. But it is an added advantage, as Chris mentioned, the regulator is also involved in the process.
Right. So if you are thinking of going public, this is the time to do it, because you guys are certainly very promoting it and proactively helping out any companies. And just coming back to the disclosures question again, because you are the legal director, what are the actual cost implications of a company?
Actually, they can have a compliance officer. It's as simple as that to guide the board. So it's a matter of complying with the listing requirements, and the bulk of it is really disclosure based. So it's really the corporate disclosures that are most important, and the disclosures have to be accurate, it has to be true and free of misleading information. So they can basically decide what to disclose and what not to disclose, but they've got to make it true and accurate. So that is the main duty they have, and I would say that's where the cost is concerned. Probably it's only a matter of hiring a competent compliance officer.
But we had some very big corporates here who actually hasn't even done that. I mean, what they are saying is that the compliance was still not an issue in the sense where they need to even have a dedicated officer. Because they are already, the companies running well, it is quite transparent, and the basic information that is required to be given out happens more or less even an automatic state after the first year.
Yes. So once the board of directors understands the spirit of the listing rules, they will do it on their own.
That's right. So actually there is no additional cost, perhaps other than the annual reports and stuff like that, that needs to be
and what is important here, Vasudha, it's the information need not be good news all the time. It can be bad news also. There is a duty when there is a bad news. For instance, if a factory takes catches fire, then there is an onus upon you to inform the public, the investing public. So it need not be good news all the time. Even bad news, you have to tell the truth, so that the investors will make a call on it and will make the decision.
Right. Yes.
Add on to that one, it is beyond the scope of just issuing directives to the entities whom we are regulating. SEC took the initiative to conduct the regulatory symposium to explain in simplified form what some of these recent directives means, what is the impact on these directives on those entities, and what actions that they need to inculcate within themselves, so they will comply in a simplified manner through this processor. So that's another initiative. Instead of just issuing directives to the entities, we take through that hand-holding process as well.
So are more engaging it in a more friendly manner also.
Exactly, because at the end of the day, getting the compliance is more important than going after a violation.
Precisely. It's better to educate the company, because sometimes it might be because of ignorance, not knowing that this should not be done or so.
That's right.
Or some mistake on their part.
Yes, since you brought up the word ignorance, Vasula, it's quite common, because these were closely held, family held entities earlier. They might trade with one of their sister entities, thinking that it is okay, it was normal, because that is how it was happening all along earlier. Now, since it became a public entity, the notion of related party transactions will come into play, and there's a requirement for disclosures. if they are going to continue to transact with these entities, it's not a prevention.
Right.
It's just to share the information with the investors as and when they become relevant.
Right. So Harshan, I think we have an exciting hour, and I think it's time to bring the program to an end. You heard it here. The Securities and Exchange Commission directors more or less elaborated on how the proactive role that the SEC is taking on to help anybody out there who is interested in taking their company public. Thank you.